Sure. So I've been trading since 1999. Age is, gives my age away a little bit there, but basically I started out just being fascinated by the dot-com bubble. It was incredible. I didn't have any money back then, and so I kind of played around with fake accounts, and it was just incredible to watch how much you could grow a fake account or a paper trading account. And it kind of addicted me to trading, and to the point where I said, hey, I got to learn how to do this. I spent years losing money, as most traders do, because you do everything wrong. Slowly, I learned. I had to work 3 side jobs to just replenish my trading account, to be honest, once I was getting started. But over time, I started to learn that charts were the true way to figure out shorter-term moves. It shows you what the most probable outcome is, and as long as you play it, you essentially become the casino versus the gambler. And that's really what I've done now for the last 20 years or so.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Gareth Soloway dives into the future of cryptocurrency, sharing insights on Ethereum, altcoins, and Bitcoin's real price prediction for 2025. As a seasoned crypto veteran, he breaks down market trends and potential catalysts shaping the industry. Let's catch him up to know more about what's ahead.
Yeah, so in crypto, sentiment is huge because it's a very emotional market. So crypto is a majority, and it's slowly changing, but it's been a majority of retail investors. And so emotion runs higher versus in the stock market, you have these mega institutions, pension funds, and they'll ground a market so it doesn't have crazy moves. But there's no doubt that sentiment is very, very key. And one of the things I will just say is that over the last week, especially just the last few days, in the crypto markets, when you start to see some of these crazy moves, like a 600% move in XLM, or Cardano moving 300-400%, these are things that as a trader you start to pay attention to because they usually occur at the end of moves versus the beginning, right? And so as an investor, as a trader, I start to pay attention. I start to look for opportunities in the short term for pullbacks. That's something I like the analogy there. It's essentially like, so money in markets tends to gravitate in uncertain times towards best of breed, right? So whether it's Apple stock or Bitcoin, those will be the first ones to go. When it gets so easy that money starts flowing to like the crap coins, if you will, that's where people are just at that point pure gambling, and it's showing that there's no real kind of investigation or knowledge being used. It's just like, hey, I'm gambling, let's try this, and this, and people are making crazy amounts of money. And historically, that was the high of the dot-com bubble. In 2021, we kind of saw that with crypto in many ways before the bear market. And I don't want anyone to think that I'm saying that we're heading into another bear market. I'm just saying as a shorter-term trader, I'm looking for a pullback from these levels or a retrace to kind of cool the jets of the crypto markets here.
Bitcoin's recent pullback to $90,742 on November 26 has sparked intrigue among market participants, many of whom see it as a strategic buying opportunity. After rebounding to $95,000, Bitcoin has renewed optimism across the cryptocurrency market. The total market valuation rose 7.3% between November 26 and November 28, reaching $3.32 trillion, suggesting broader market momentum is recovering. Analysts and investors are now focused on whether the $90,000 level marked a local bottom, signaling the next phase of Bitcoin's trajectory toward $100,000. Key market metrics offer compelling evidence that this might indeed be the case. The Coinbase Premium Index, a vital measure of demand for Bitcoin in the United States, offers one of the first indicators of market recovery. This index tracks the price disparity between Bitcoin trading pairs on Coinbase and Binance, acting as a proxy for U.S. retail investor activity. During the November downturn, the index slipped into negative territory but has since rebounded to 0.091, highlighting renewed demand. Tulio Moreno, a leading researcher at CryptoQuant, noted that Bitcoin's demand growth is accelerating again post-correction, suggesting that new investors are entering the market. Adding to the bullish sentiment, US-based spot Bitcoin exchange-traded funds recorded significant inflows following the price dip. On November 26, these ETF posted net inflows of $103 million, breaking a two-day streak of outflows. Institutional interest remains robust, with cumulative inflows to Bitcoin ETFs surpassing $30.3 billion. Bitcoin investment products also saw $3.07 billion in inflows during the week ending November 22, further underscoring a strong appetite among institutions, a key driver of upward price momentum. Another critical metric supporting the bullish outlook is the continued decline in Bitcoin balances on exchanges. These balances have dropped below 2.4 million BTC, hitting six-year lows. This trend suggests that investors are increasingly moving their Bitcoin to self-custody wallets, reducing the supply available for sale on exchanges. The tightening supply often coincides with upward price pressure, reinforcing the notion that Bitcoin could be gearing up for another rally. With demand surging among both retail and institutional investors and the supply of Bitcoin on exchanges dwindling, $90,000 is shaping up to be a pivotal support level. As these factors align, Bitcoin's potential for surpassing $100,000 appears increasingly likely, fueling anticipation for the next leg of its historic bull run.
And so what we are seeing is Bitcoin is pulling back here. And what I think is fascinating is that we came up as high as about 99,000 and change right up here, and we're now seeing a pullback. And just to explain what's going on here from a psychological standpoint is that you had a lot of people that were expecting last Friday, even myself, I was like, hey, I think we're going to break 100K here. And it didn't happen. And it didn't happen over the weekend. And so what you had was a lot of kind of gambling money pile in at 99,000, thinking it was going to break. And now that it hasn't broken, they're getting nervous. And now as it downticks, that kind of weak-handed investor is starting to sell, and it's causing Bitcoin to retrace. And I think that's really important because I still think it's going to break 100,000 here. I just think you have to kind of wipe out those weak hands first that kind of piled in just for that glory of watching the breakout above 100K. So right now we are pulling back. Sentiment had gotten very, very bullish. Everyone was gambling and thinking it was going to be a 100K easy break. So now you have to kind of wipe out those weak hands. Once it gets down, you'll have some support around 91, 92,000 here. My guess is it'll stabilize, and then we'll start turning back up once those weak hands are kind of liquidated from the market. And I think at that point, this is interesting. At that point, I think not only do we pierce 100,000 on Bitcoin, but I think money from the altcoin moves will start to rotate into Bitcoin and push it even higher than 100K. Now, on a technical basis, this is something I discovered. It's the parallel channel that goes back to the high of 2017. So here's your bull market high of 2017. Here's your bull market high, the first high in 2021, and exactly to the high, the second high in 2021. Now, the way I tell if a line is important is I drop the parallel down. And so what we can see is this lower line is a parallel, right? So I'm taking it down, and notice how it perfectly interjects at this low and at this low. And what that tells me is that this line has credence, meaning it has power, because there's an even parallel with that kind of solidifies its importance. And so what I would expect is at some point we push back up, pierce 100,000, and we kind of go up to tag this upper level, which is right around 107 to 108. Once we get there, then I think we get the bigger correction, maybe back to 74 to 75. Now, where do I get 74, 75 from? That's looking at this former all-time high right here that was in March. And there's inevitability where markets tend to come back to what I call the scene of the crime, right? So you had this level right here. We kind of chopped around. We bull flagged here. We broke out. And there's this tendency to come back into that level here. And then that's where, for me, that's where I'm a buyer. Like if you give me 74, 75, I will buy hand over fist, because usually what you'll do is you'll break out, retrace, and then you'll continue up much, much more sharply. So at least to kind of game it out, that's what I would expect from a technical standpoint.
Solana's native token Sol has shown impressive resilience after a sharp sell-off, recovering 8% since tipping to $222 on November 26. This rebound follows a correction from its all-time high of $263.80 on November 23, raising questions about whether the bull run is faltering. However, on-chain and derivatives data suggest Sol still has substantial upside potential, supported by strong fundamentals and growing adoption. Despite concerns, Solana's blockchain remains a powerhouse. Its total value locked surged 48% over 30 days, reflecting increasing demand for its ecosystem. This contrasts with modest TVL growth on other networks like BNB Chain, 14%, and Tron, 13%. Key contributors to Solana's rise include Jito Liquid Staking, $3.4 billion, plus 44%. Jupiter Decentralized Exchange, $2.4 billion, plus 50%, and Radium, $2.2 billion, plus 58%. These metrics highlight Solana's position as a leading programmable blockchain. Although Solana and Ethereum are often compared, they dominate different niches. Ethereum excels in decentralized finance, with Uniswap and Kawaswap seeing sharp volume increases, while Solana leads in memecoin launches. This diversity allows both networks to grow independently, but Solana's memecoin reliance introduces volatility risks. Optimism in derivatives markets further bolsters Sol's prospects. Its futures premium hit an annualized 23%, signaling bullish sentiment. With Sol's $113.7 billion market cap, still a 73% discount to Ethereum. Its path to $300 remains plausible, driven by expanding adoption and solid fundamentals. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.